Well, good afternoon, everyone. A bit later than normal. It's 20 to 7 on Tuesday, the 8th of June. And as you can see, we're looking at VectorVest USA, and everything is trend-wise is looking good. The short-term trend is up, the underlying trend is up, and the longest measure of the trend on VectorVest is up, and the advice is positive. As you can see, the advances greater than that of declines, and over the last few days the breadth of the market as measured by the VectorVest proprietary buy-sell ratio is moving up steadily. It's still a long way from a mega overbought situation, and similarly the momentum as measured by the proprietary market timing indicator is marching up, still quite a way from the level associated with a mega overbought situation. So that all looking pretty good. Let's just have a look at the VectorVest composite itself, and that's the composite, folks. It's the broadest measure of the American market that I know of, and it's found resistance once, twice, three times, and I think it's going to break on the fourth attempt with any luck. As you can see, there's the momentum rising, the buy-sell ratio rising a long way before it gets to this overbought situation. There is fibs at work as well for those of you that are fib analysts, that low to that high, and you can see that this was a three-wave pullback to an exact 62% retracement. That's normally positive. There was a little bit of reverse divergence, which is material I teach in one of my courses, where the price rises but the indicator falls, and that normally precedes quite a decent move. So I tend to be positive by nature, but it would seem to me as if this wants to go higher. And I have several positions in the American market, probably not enough. I've been very busy recently working on the VectorVest When to Sell course, which is coming up. It's running at the moment, but my part of it starts next week. And I haven't bought into Pool as yet, and I haven't bought into MU. In fact, I've decided not to buy into MU. But I have decided to buy into Pool if it hits a certain level. So I'm going to just discuss that for a second. That's Pool, and as you can see, earnings per share, make it a bit thicker so you can see it. Earnings per share, in fact, doing exactly what it should do over the last year. Clearly, there's an awful lot of people cleaning pools because the share price has gone, or the earnings have gone from $7 to $11. That's reflected in the price. Seems to have broken out here, out of this range that it's been in for most of since September last year, and it's charted a symmetrical triangle. Broke, has come back and kissed that trend line a couple of times even, and I'm in fact will be a buyer of this share if it breaks above, I think it was last Friday's high. As you can see, earnings per share growing very strongly, and this ramp up in earnings per share always a good precursor of a decent move. Nobody knows what's going to happen next, but I'm reasonably happy with that one. Apps has had a good day today. It's given up some of it now, but as you can see, this is a contrarian trade for me, and it's pulled back here to this 61% retracement, and then it went into an inside day formation. It broke that. I bought into it here somewhere, stop loss down around there, and it's had a nice run today up to about 75, and I'm still long of that position. Hopefully it's going to go an awful lot more. As you can see, earnings per share, forecast earnings per share has been marked up by 20% over the last little while, and I assure you that earnings per share is the engine that drives the share price. So my stop loss on this one is already at entry, so that's looking quite good. I also have positions in Target, which is going well, up 3% today. Okay, I only bought it at 230 and it's at 236 now, but it's going the right way. AIG is up a little bit today, and Disney still flat on the day. So my spread bet on the GDX looking a little bit sick with the gold price. So let's go to the gold price straight away. If we go to the gold price, that is a 4-hour chart of spot gold. And as you can see, it pulled back and pulled back savagely last Thursday. It actually fell, as you can see, in 5 waves. Now, yesterday afternoon in the VectorVest Q&A, I was in a quandary as to whether this big move up was a resumption of the trend. And unfortunately, the market has answered that question for us. And unfortunately, folks, there can easily be more downside here. As you can see, the gold market, in fact, came off this 1903 level, and it found resistance up there twice. So we could easily have a repeat of this on the downside, which would take us down to about 1840, and on the daily chart there's a very important support level at the 1840 level. So if you're looking at gold shares, if you've got gold shares, which I've got 2, there could be a little bit of pain ahead. If you haven't got gold shares and you want to get gold shares, then do nothing at least until you see a close above this level, which is 1903. And probably the safer route would be to wait until the market clears 1916, which was last week's high. I assure you that if this pattern fails, that this market will fly on the upside, and I personally be happy to in fact add or buy some new gold positions if that should occur. So at the moment the market is still deciding for us what it wants to do. So I hope that helps a little bit with your strategy determination. Market so far is answering that we probably got a little bit more downside here. Okay, so just be careful there. If we have a look now at the UK market, and I think I've got the composite of the UK market here. Yeah, here we go. If we look at it over the last 6 months, that's the VectorVest composite of the UK. And the short-term trend is up, the long-term trend is up. The long-term trend has been up since last November, since just there. And this confirm call methodology that we use at VectorVest has ignored this noise and kept us in this long-term trend. And as you can see, similar to the VectorVest composite in the US, that we are in fact pushing on these highs, and we need to get through these highs. Again, there's fib at work. That low was a 62% retracement. That's always a good sign. The divergence on the UK market is not as strong, but if we are trend followers, then I think that we have to be long of this market. And I'm certainly holding on all my positions, and I'm tempted to add to some positions, and I'm tempted to add into Lion Trust Asset Management. And if I go to the portfolio that I've got, that's Sylvania Platinum. Down a little bit today, but still hanging in there. Games Workshop up a little bit today, but clearly it's going to take a great deal of energy to escape from the last old high. It's been up at that last old high a couple of times. CCC looks great, but the share looks probably a little bit extended at the moment. It's had a great run, but nevertheless, everything it's trading in a ascending triangle here, and that's normally quite good. So something like this, that's normally a good sign. So moving averages are saying yes, but as you can see, it's charted one of my Wyckoff springs, and a break of that, and that started to look quite good here. There's the earnings per share that's driving the price. So that's looking quite good. Lion Trust. And as you can see, we've got an old resistance point, a couple of them here. Came back and kissed it, came back again, so it's charted a double bottom here. And after a move up, a double bottom's an exceptionally strong formation, and you can see what happened yesterday. I think that pullback here would be useful, and I'm going to consider adding to that position if we break those tops. I've already added, in fact, a couple of times to JD Sports since I bought into it last April, and I added the last time just here, based on this pullback to that old high, plus the 61% retracement, plus the hammer, all coming in at the same place. Clearly, it's got to get through this old high, like everything else we've been looking at this afternoon. The VectorVest composite, although we haven't looked at the S&P in detail, it's been sitting at that 4,200 level for a fortnight now, and even JD Sports has to push through those highs. So decisions to be made. So I've got Sylvania, I've got JD Sports, I've got Games Workshop, CCC. I think I'll add LIO. Italia Mining is fairly steady, but the copper price still pulling back, and it's pulling back. I'm reasonably happy that it's pulling back in a corrective pattern. Nevertheless, it's making falling lows. Cranswick is still hanging on to that £40 level. I really like the GB group. I've had a good run in Persimmons and Bellway. We've talked about the gold stocks and what to do there. I think we're going to have to sweat it out there for a day or two. And Halma, of course, is such a fine stock, such a fine company. And if we have a look at the Halma chart, we can see that what's new. This is trying to break on the fourth attempt. So moving averages are saying yes, and Halma is due. Let's look at the 5-year chart. It hasn't put a foot wrong in all of that time. That's earnings per share rising, and with any luck we're going to get a nice one of these moves in Halma soon. So Halma's another share that I don't have any problems adding to in the slightest. And if we go back a little bit, 1-year chart, 1, 2, 3, breaking on the fourth attempt. Volume is rising. Go back to, you can see here on that pullback there was no volume at all. A very good sign indeed. Very good sign indeed. So I've been holding that since last April. So I haven't really done that much at all, but I would be tempted to add into Halma and add into Lion Trust and maybe CCC if the market breaks up. I would like to see the S&P itself push above, well above 4,200. There is the S&P as we speak. And that's a 4-hour chart, and this is the overnight market. As you can see, market has come back to fetch orders here and run stops here pretty much for the last couple of days. I'm still holding a long position here. I bought into it yesterday, maybe a bit impulsively at 4224. My stop loss was down here at a fib level at 4198. And I've nearly stopped out this afternoon, so I've made 2 points in a day. That's just the way it goes. So maybe consider bringing the stop loss up to 4207, or just culling the position until it breaks. So you can see that that's where we are in this market, and pretty much everything we've looked at is saying the same thing. Based on VectorVest US and VectorVest UK, I'm happy to hold positions, and I feel that we've got a fairly strong run ahead of us once we get through these levels into June. I think if that occurs, we'll be in a position where the VectorVest market timing signals turn into a mega overbought situation, and that could take us towards the end of June. Let's just see what happens on a day-by-day basis. So I hope you found this useful. Just be careful in gold. The gold market needs to make its mind up for us. Don't do anything if you're not in gold until you see certainly a couple of closes maybe above 1903. That would be very positive for this market indeed. And if we see closes above last Thursday's high, for example, then I think this market will fly. So let the market make the decision. You need to be flexible in this business. If the technical picture changes, then you need to change your mind on a sixpence. If you've ever read the biography of Steve Jobs at Apple, he was famous for his flexibility. He would argue strongly a point in a meeting, and a few minutes later, if a report came in with new data, he would change his opinion totally. The fellow at Amazon also, it seems, has developed that particular trait, Bezos. In technical analysis, if we look at the technical situation, if the technical situation changes, then we have to change our mind, and change our mind very quickly indeed. Thanks very much indeed. Bye-bye.